Good evening, everyone. On a Friday night, welcome to the Anderson Report. This is Friday, July 24th, a Friday night special. We're going to recap the week and look at what to maybe put at the top of our watch list for next week. And I am Tim the Source Anderson. This is the Anderson Report channel on YouTube. It's also available on TJ Anderson 12 on Periscope. My Twitter handle is TJ Anderson 1. If you have not yet subscribed, please subscribe on YouTube by hitting the little subscribe bar. And if you hit the little bell indicator right next to it, you will get notifications through your favorite messaging service on when the next broadcast is. So let's take a look at how we settled out the week. Really a pretty action-packed week in terms of market movement. First 3 days were up. The last 2 days were down. We settled just slightly off on the week. And really, we came into today with the news that China was, of course, earlier in the week, we told China we wanted them to close their embassy in Houston because they were basically using it to steal intellectual property. And primarily, I think, I don't know to what degree it's been totally corroborated, but some research going on in terms of potential coronavirus vaccines. So China said there may be retaliation for this. And we turned on our computers and televisions early this morning to the news that China had told the U.S. to close our embassy in Chengdu, which is in Western China in the Sichuan province. Some people thought it was not that big of a deal. Some people thought it was a very big deal. It maybe wasn't one of our larger provinces, one of our larger embassies, but it's in an area where there's a tremendous amount of manufacturing in the western end of China. So really, the Chinese market had a more severe reaction to this than our market did, because the Shanghai Composite was down. Where are we here? The Shanghai Composite was down 3.5%. Actually, a little bit closer to 4% in the Friday trading session. Our markets did not have quite that much of a reaction, although they opened significantly lower after the sell-off that we had on Thursday. The Dow was down 0.7%. The S&P down 0.6%, which meant both of them were down just about 2% over the last 2 days. On the week, the Dow lost just less than 1%. The S&P lost a little bit less than that, just 0.3%. And the NASDAQ Composite was down just less than 1% today. So it was down a little over 3% over the last 2 days. Finished the week down 1.3%. Month to date, all these averages are still up. There's a full month. There's a full week left in the month. The last trading day of July is next Friday. And for the week, for the month, the Dow is up 2.5%. The S&P is up 3.7%. NASDAQ is still up 3%, even though it's about 4% off its highs from earlier in the week and a week and a half ago. And the Russell 2000 is up just less than 2%. The Russell was down 1.5% today. Actually, the Russell is down 1.5% on the week. It had been having a very good stretch over the last 2 weeks and is still up just less than 2% on the week. It's still holding above its 200-day moving average. The Russell went out at 1467. So now let's mention just one thing about the S&P 500. We have referenced the June highs on a number of occasions. The market had a very sharp rally to the upside right after the May employment reports came out on the first Friday of June. And then the following Monday, there was a very sharp rally to the upside. The S&P had closed at 3231. We had held a breakout above that level for a number of days. Over the last 2 days, we are slightly below that breakout level, but we're still above 3,200, and the S&P is still up 3.7% on the week. Now, the NASDAQ, it's what's really got a lot of people's attention. It had, obviously, as I've mentioned over and over and over again, extremely outperformed the other market averages. At one point in time, it was up 7% month to date. It's still up 3% month to date. The NASDAQ closed at 10,360, actually well off its lows of the day. The lows of the day were pretty much during the first half hour of trading when the NASDAQ touched 10,240-ish, 10,250-ish. And let's just mention that on June 13th, the day after the NASDAQ was down about 6% when we had that very, very sharp sell-off, the day after its first close above 10,000, actually, I've got that wrong. On July 14th, intraday, when we had a sell-off to the downside, even though the NASDAQ traded as low as 10,200 on an intraday basis, it had been down 2.7% the day before. It opened lower, recovered off that. Today it opened lower, recovered off that. It got to 10,240. On July 14th, it got to 10,200. So does that mean that it's held and it's out of the woods? You know, I think that we just can't say that yet about the NASDAQ until we get through next week. And the reason is because we're going to have monster earnings reports from some big mega cap tech stocks in the NASDAQ composite. Next Thursday after the close, we get earnings reports from Apple, Amazon, and Google. That's Thursday after the close. The day before that, on Wednesday after the close, we get earnings reports from Facebook. We saw what happened with Microsoft. Even though they had very good earnings, they beat on revenues easily. They beat on earnings, but their cloud numbers grew. Even though their cloud numbers grew at 47% quarter over quarter, that was less than 50%, which it had grown at for the last 3 quarters before that. Some big momentum people thought, well, maybe the growth is slowing in Microsoft. The rate of growth is declining a little bit, even though it's still very impressive. This is the way some momentum investors react. The stock sold off 4.5 points yesterday. Tesla had very good earnings. The stock had much more of a hyperbolic rally. We went into this in quite a bit of detail last night. Tesla, despite the fact that it had great earnings, the stock sold off about 5% yesterday. And so we got to see not only what the earnings are for Facebook on Wednesday night, but Amazon, Apple, and Google, I guess they actually call it Alphabet, on Thursday after the close. before we can really say that, look, the Nasdaq is, it's going to hold 10,000. It might test 10,000. It might even test 10,000 before we get to Thursday after the close. We'll just have to see. But clearly the market was weak today, out of the chute. Frostier relations with China are almost inevitable after the announcement that they had not said they might not be evacuating and closing the embassy in Houston by Friday, as we had requested them to, and B, they're telling us to close one of our embassies in Western China. There's also this report that there is a dissident that's been working with the Chinese Communist Party, who came into the country at one point in time, got a lot of questions from the FBI and some other agencies. She knew that she was potentially going to be arrested for something. She went to the Chinese consulate in San Francisco. Allegedly, she's still held up there. I think if we had the chance to arrest her, we would. And there's speculation that we may tell the Chinese to close the embassy in San Francisco. We'll have to follow that story next week. So, in addition to the tensions with China, combined with the fact that the Stimulus 4.0 plan is being pushed out, the rollout of what the House Senate team, in conjunction with the White House, is going to write into that plan is going to get pushed out to next Monday. I actually think that's probably a good thing, but so I'm just looking at a couple questions in the chat. I'll get to them in a minute. So the rollout of Stimulus 4.0 is being pushed out to Monday. I think that some deal in some form will get passed. There's a lot of people that are, I don't know what the right definition for them is. The tax purists, the budget purists, really are adamant about putting a payroll tax cut in the proposal. I understand that. I know that that would be the right thing to do in a best case scenario. I think the issue is it would never get passed by Congress, by the House Democrats, and it would just delay the process by another couple of weeks. I think that I have a tremendous amount of confidence in Mitch McConnell, that he's the master at this process. He's going to lay out what what the bill is going to be by the House, by the Senate Republicans and the White House on Monday, and then we'll go from there. Some version of it. If it's not passed next week, it's going to be passed before the Senate goes on one of their seemingly never-ending recesses. So I got a question here. Do you know the reason for silver being up lately? I think a lot of it was a technical breakout above 19 and 20. I also think that a lot of people are looking at silver being nowhere near as high as it was in 2011, like gold. In fact, today, gold closed at a new all-time closing high, $1,898 an ounce. I had thought it had traded above 1900 back in the fall of 2011. It may have traded there at some point in time intraday on a final push, but not close there. I couldn't really access it on my chart system, but I saw two different reports. One from the Wall Street Journal that the all-time closing high for gold was in August, and of 2011 at 1891 and change. Another from another news publication that it was 1895 and change in September. Both of them are very reputable. I'd probably go with the Journal on what their data says. And I think there could be a difference is that one of them might be talking about the spot price. One of them might be talking about what was at that point in time the near term futures for gold. But regardless, it closed at a new all-time high tonight, just about 1898. I saw it ticking at 1900 a little bit after the futures closed. So probably those futures trade globally after that. I think it's probably going higher. It feels like it's gonna just grind its way up through 2000. If you drew some charts, I would say watch the 2200, 2300 area for gold as potentially a target. But clearly, if we get some eco-political developments or big geopolitical developments uh, between now and when the rally for gold, that the rally could stall in gold. But right, I can't see that happening certainly over the next 4 to 6 months. It seems like it's going to keep grinding higher. It certainly hasn't been a frenzied rally in gold where you have just crazy single day uh, price gains in it every day. You've had that little bit in silver on a percentage basis. But remember, gold just traded at an all-time high above where it traded on a closing basis in August and or September 2011. Silver went out right around $23. And I know that when gold reached its high in 2011, silver got very close to 40 if it didn't trade at 41, $42 a share, $42 an ounce. So silver is nowhere near its high from 2011. I'm certainly not saying that to expect it to go there. I really don't know the fundamentals of where the industrial demand for silver is right now, vis-a-vis supply and vis-a-vis where the industrial demand was um, back in 2011. But I think that it had a sharp move from 19 and a half to 23. The longer it holds that big move higher without retracing a third of it, the more I think it's like maybe just consolidating this gains. And if we get into if we get into mid next week, late next week, and silver is still holding the breakout above 22, 2250, it's probably got another leg higher. I'm not going to get into specific stocks because I can't really talk about specific stocks that might benefit from gold and or silver, but that's what I think is going on with the commodity right now. I think that gold's going to continue to grind higher, not explode higher. And I think that silver is consolidating the gains that it had really in a short period of time from last Thursday or Friday to Tuesday. It shot up to 23. It's been between 22 and a half and 23 and a quarter since then. If it can hold that move, it's probably got another leg up. So, John, we arrested some up here. Yeah, we probably did. I don't know the specifics of it. Okay, so that's gold. Um, gold is gold is acting completely different than it acted in the 1980s when it was an inflation hedge, because there's no inflation at all right now. Okay, when we went off the gold standard in 1971, some people will say we didn't really officially go off it; they just bumped the price a little bit in a few stages. We officially went off in 76. The stock then, the commodity then quickly went to, it had been $35 an ounce since Bretton Woods in 44. Okay. So it had a sharp move up to 125 bucks. It then went higher and higher and higher. It got up to about 800 bucks in, I'm going to say 78, 79, maybe 79. It was, everybody thought it was it was a big inflation hedge. It was a hedge against potentially the market going down. We did have very high levels of inflation in the late 70s, mid to late 70s, actually. It pulled off that 800 level, didn't get back to that level until I think the rally that it had maybe a year before it got to its highs in 2011. Remember, in 2011, we had the potential Greek debt default, where they had to work some rescue plan from the EU. And then we had also the we had a massive budget impasse in the U.S. where we did not raise the debt ceiling, and the at least one credit agency downgraded the U.S. government debt from AAA to either AAA minus or AA plus for a, I can't remember if it was 4 to 6 months or whatever it was. That was really the catalyst for gold to make its final move. And I think what gold where gold represented a ultimate flight to safety and an inflation hedge in the late 70s and that was before a world where foreign currencies had almost unlimited liquidity. And now gold seems to be a hedge against extreme turmoil in the global central banking system, and or the potential that governments are running way too high a deficit as a percentage of their GDP. That's just kind of my read at it. Gold is completely different than it was in the late 70s and early 80s when it was an inflation hedge, because right now we've got no inflation. We're going to have no inflation next year. We're going to have no inflation the year after that. Now, I'm not saying that the deficits don't matter, but right now it has not created an inflationary issue in the near to intermediate term. So gold is it's interesting. I'm certainly not against owning it as a percentage of a portfolio. I will say that it's almost comical when you see people that have been gold bugs and that have been pounding the table on gold for 10 years and watched it underperform every asset class out there by a long shot. This guy, Peter Schiff, no relation to Adam Schiff, who runs this thing called the Pacific Euro or the Pacific Fund or whatever it is. He's obnoxious to listen to on TV. He's been pounding the table on gold for 10 to 15 years. He thinks the world's coming to an end. He thinks the US dollar is going to zero. Of course, none of that's going to happen. And he was on one of the financial news shows at the end of last week trying to take a victory lap and pounding his chest because for the first time in a decade, he's been right on gold after being wrong for 9 years or 14 years or 15 years, however it's been. So it's just comical to listen to the people that have been gold bugs underperforming every other asset class on the planet for as long as anybody can remember. All right. That's my comment on gold. So what else was there? Crude oil today bounced a little bit. It held the 41 level. It rallied, didn't have much of a rally, but it got up to 41.35, 41.40. It's a positive sign. Energy did come off a little bit this week. This week, it was one of the best performers last week. It touched crude oil touched 42. It went out at 41 and a quarter. I just think that's positive. Okay, now I made a big deal last night about even though the markets were down 1 to 2% from the S&P to the Nasdaq, the advanced declines held up extremely well. Well, what happens frequently, and I mentioned we'll have to see tomorrow if it happens or not. Sometimes when you get a sell-off like we had yesterday, most of the sell-off with on Thursday, with the Dow and the S&P being down over 1%, the Nasdaq being down just over 2%, the advanced declines held pretty much a little bit negative, but not much. Sometimes it takes a day for that selling to spill over into the broad market, since most of the selling yesterday was during the afternoon. Well, the advanced declines were weak today. They were probably I would say maybe representative of the overall market, maybe a touch weaker. On the New York Stock Exchange, we were almost 2 to 1 negative. Certainly not a horrific day, but we had 2 decliners for every stock, for every one advancer. And on NASDAQ, which had, I think, net gainers yesterday, we had 3 decliners for every one gainer. The Russell lost 1.5%. It's still up 1.5, 1.8% for the month. And even if we were to look at on the week, the S&P 400 mid cap was still up 0.7% on the week. The S&P 600 small cap, which mirrors the Russell, was up 0.5%. It still seems to me that there's money going into that space since it underperformed so severely the first half of the year. We got to continue to watch the small caps going into the last week of the month to see how they act. So where are we next? So we had some very interesting earnings reports late last night that we really didn't mention. And I would say that first and foremost was Intel, which is a now almost a blue chip, almost a legacy blue chip name, where it was a big driver 20 years ago. Intel is a member of the Dow Jones Industrial Average. The first 2 over-the-counter listed stocks to be members of the Dow were Intel and Microsoft about 20 years ago. A little over 20 years ago, I believe. Intel really had the significant announcement that they were going to have to delay for about a year their next generation super chip. Not sure exactly what they call it. And the stock was down about 15%. So the Dow is a dollar weighted average, not a market cap average. Intel was down about $8, between $8 to $9. That's about 60 points for the Dow. The Dow was down 180 points. So a little bit less than a third of the decline for the Dow was because of Intel. Now, this did not mean that the entire semiconductor space got hammered because of the Intel news. Advanced Micro Devices is almost the mirror image of Intel, after having been a stepchild at best to Intel in the semiconductor space for well over a decade. I would say probably 15 to 20 years. AMD was just a distant afterthought when you started to talk about the chip market. It has just been crushing it this year. It had a big breakout a couple of months ago. It was up 20%. I think it's been up 20% in a very short period of time. I think what's really driving AMD is that for people, the streaming business is clearly on fire. Okay. for people that are really into streaming, for people that are playing games online in competition with other people, and for people who want fast computers for highly accurate streaming, whether they're just doing very, very high end videos or they're gamers, this Ryzen processor that AMD makes has is the hot product on the market. And everybody that is looking to buy a high-end, latest and greatest desktop or laptop computer wants a computer with this AMD Ryzen processor in it. I'm certainly not an expert in it, but when I was looking into what you needed at the technology aspect, from a technology aspect, to do some type of a streaming venture, everything I looked at talked about this Ryzen processor. And then I talked to a couple people I know in the business, and they said, yep, that's the big story behind AMD. Now, it's interesting that AMD reports earnings after the bell next Tuesday. Okay. AMD did not go up because Intel went down today. It actually went up, maybe because Intel went down. Because guess what? If Intel is going to delay their next generation, latest and greatest chip for a year, who do you think that benefits? Well, one of the primary benefiters will probably be Advanced Micro Devices and probably possibly some other chip makers. Texas Instruments had good earnings either earlier in the week or late last week. I believe that Taiwan Semiconductor had decent earnings. So this was not a big issue for the entire semiconductor world. It was a big issue for Intel, and we got to see how that stock reacts next week. Now, so that kind of brings us to a couple of other earnings or announcements. Just in the job front, Schlumberger announced that they were going to potentially furlough 12,000 workers. You know, they have some deep water activities. And even though oil's in the, gotten back above 40, some of that's really high margin, high cost business. And maybe at 40, it doesn't quite cut it yet for them to operate at full capacity the way they used to. American Express reported, I think they reported this morning before the opening. I don't have the numbers in front of me, but I did see that their revenues were down 29% in the second quarter. That just to give you an idea of how the shutdown in the second quarter affected pretty much like all commerce on credit cards for the quarter. American Express's revenues were down 29%. It'll be very interesting to compare that to Visa when they report next Tuesday after the bell. So next Tuesday after the bell, we get Advanced Micro Devices earnings. We get earnings from eBay. A lot of people think there's been a lot of activity on eBay during the shutdown. People staying at home, they're bored, so they're buying stuff. Lattice Semiconductor is a little bit of a boutique semiconductor company. It'll be interesting to watch that, given how hot AMD has been and how disappointing Intel's earnings were. And Starbucks reports Tuesday after the bell. So Starbucks is look, somewhere in between a consumer staple and a consumer discretionary. Do we need coffee every day? Yeah, we need coffee every day. Do we need to spend $5 for a Starbucks latte every day? Probably not. So Starbucks is a little bit of a hybrid in terms of where it falls into the whole dichotomy of needs and wants. But, we'll see. I'm sure their revenues are going to be down. It'll be interesting to see down how much. GE reports on Wednesday after the close. It's a little bit of a broken stock. It had gotten up to 13. Obviously, it's a potentially big turnaround. It's like turning around an aircraft carrier. It's The stock underperformed for years, made tons of mistakes, still hasn't recovered from all their uh, things they bought that they really shouldn't have bought over the last 10 to 15 years and maybe even longer than that. Uh, so badly that it was taken out of the Dow Jones Industrial Average after being in it for, I don't know if it was original member, but you know, it's got big exposure to the aerospace business. Trade as high had finally probably, and this guy Larry Culp who used to run, I'll think of it in a minute. He's probably the right guy to run the company. I'm not making a recommendation to own the stock or not own the stock, but it was $13 in February. It's off its lows a little bit, but not nearly to the extent of the rest of the market. It went out at $6.80. They report Tuesday after the close. I'm sorry, Wednesday. They report Wednesday. They report Wednesday morning before the opening. Spotify also reports Wednesday morning before the opening. Mindset of Gail Dudak. I actually know Gail Dudak. I used to know Gail Dudak. I haven't talked to her for a number of years. Um, I, I haven't heard her speak recently. I always thought that she was a uh, I always thought that she was a very disciplined, very measured equity strategist. She was the equity strategist at Warburg for a long time. She may have her own. I think she's had her own business set up for a decade or so. She may be associated with a brokerage firm for licensing reasons. Um, yeah, I always like Gail Dudak. I don't know what her current posture is on the market, um, but I always took her stuff with a high amount of regard. I'm going to have to look up what she's doing now and what she's saying about the market. Schiff is a good salesman. I know you're talking about Peter Schiff, the gold bug. I'm sure he is because he's still got money committed to him, and he's a little bit like a short sellers fund. Look, he can be dead wrong on gold, but gold is I think a lot of people will still put money in gold. The same reason the big mega funds that put money with Jim Chanos, who I have a much higher regard for, even though he basically runs a short selling fund than I do Peter Schiff, is that uh, big people that have big pools of money will put money with Chanos and never pull it because for them it's almost like a hedge. Okay. If the market blows up and goes down 50% one year, they're going to make a ton of money with Chanos because he's going to be short very vulnerable stocks. But he might be fighting those shorts for a year or two. People are not going to pull their money because they're putting in 5% or 10% max with Chanos as a short fund, as a hedge against everything else that they're invested in. Now, that's probably the similar thing with Schiff and his gold funds. People will put a lot of money with him because that's just their gold exposure. And that's what he does. And he knows it better than they do. And they might not want to hire gold analysts internally. Um, the difference is Chanos is pleasant and intriguing to listen to when he's on TV. He's very insightful. It's very fascinating to listen to what his train of thought is and how he's looking at things. Schiff is just irritating because you can tell that he's mad, that he's fighting a bad trade and he's been fighting it for years. And in his mind, he's totally convinced that he's right and the market's wrong. Any central bank news? I don't really think there's any real central bank news. The big news was the EU action early in the week that sparked a pretty good rally on Monday. Um, I was never a big uh, Christine Lagarde fan when she was with the IMF. She's what Mario Draghi's position was now with the EU, European Central Bank. You know what? So far, from my perspective, she's exceeding expectations. Um, so a couple of other earnings as we get into next week. But I will say this: I love the questions. Okay. I notice that in this chat here and the stuff I get from people after a video, either DM to me on Twitter or just tweet it out to me. Um, I would say that most, a high percentage of the questions are great questions. Now, um, so Wednesday after the bell, we get earnings from Apache, big oil company. Be interesting see what they say. Uh, Facebook, obviously very much in the news. One other news item is that you were going to have these high executives from Facebook, Google, Apple, possibly Twitter. I'm not sure exactly what the list was, but you know what they are. 4 or 5 of the big social media companies testify before Congress on Monday. That's been delayed because there are going to be all sorts of memorial hearings for John Lewis, who just passed away, big civil rights leader who was in the House of Representatives for a zillion years. That's been delayed. I'm not sure when it's being rescheduled for. But Facebook reports after the close. Now, United Rentals is a massive global industrial rental company that reports on Wednesday after the close. It's kind of a secret bellwether for global industrial activity. And the reason I say that is if you or I were going to maybe rent a power washer because we didn't have one, or we wanted to rent a bigger one than the one we have, or we were going to rent maybe a floor sander, or we were going to rent a tool that we don't have, we would probably go to Home Depot, or we might go to Taylor Rental. Although a lot of Home Depots have started up, rental little operations where you can rent a lot of stuff there. Okay. Now, if you are building doing an industrial project, if you're building a strip mall, if you're building an office building, if you're doing a major industrial project, if you're a home builder that's doing a major development, okay, and you need to rent equipment that you don't have, whether it's a front end loader, a crane, uh, uh, earth mover, or any other big piece of industrial equipment on road or off road, you're going to go to United Rentals. Okay. They have about $2 billion a quarter in revenue, and they rent big, heavy equipment all over the globe. They are a great barometer for industrial activity. They report Wednesday after the bell, not just their raw numbers, but what they're saying about what they see with the economic recovery. On the lighter side, Sturm Ruger reports Wednesday after the bell. The symbol is RGR. There's been a tremendous amount of headlines over the last month or so about gun sales just being through the roof. So I think that Sturm Ruger's earnings might be interesting, especially if they talk about a manufacturing backlog. Now, we get to Thursday after the close, and that's really the big bonanza. I wouldn't be terribly surprised to see maybe the Nasdaq Composite kind of like maybe not do a whole lot before at least Facebook earnings Wednesday after the bell, and Thursday after the bell we get Google, Amazon, Apple, anywhere from 4 o'clock to 4:45. Have a nice day. So I would say that Thursday is going to be an all hands on deck event for financial market commentators and people that talk about, earnings, what it means. These stocks have had monstrous runs. They've been driving the internet traffic trade. Investors have monstrous gains in them year to date and over the last few years. Everybody's going to be hyper focused on these three earnings reports Thursday after the close. And then if you haven't had enough, on Friday morning before the opening bell, we will get earnings from three major Dow Jones components: Cat Tractor, Chevron, and Exxon. Obviously, Chevron and Exxon, the two leading global energy companies on the planet. Next to, of course, you've got including BP and Saudi Aramco, but these are the U.S. headquartered global energy players. You're going to want to have, the market's going to want to hear what they say about the price of oil and what they see on the demand front going forward. And Cat Tractor should be very interesting. Cat Tractor was if there's one company 20 to 25 years ago when China first opened up, Cat Tractor went all in China almost before anyone else. And they were a massive beneficiary of it for 20 plus years. And yes, they have taken a hit from it over the last couple of years. Certainly when all the tariff stuff, when all the trade war stuff really percolated, they took a hit from it. They have big operations there. And given the fact that it's Cat Tractor, it's not, you just can't move that to Vietnam. This is not like a company making t-shirts or socks or even sneakers where you could, over 6 to 9 months, maybe move your manufacturing facilities to somewhere else in the South Pacific. This is Caterpillar Tractor making monstrous pieces of equipment. So it'll be interesting to see what they say about China. Now, any other questions? This is probably a good time. And I really appreciate everyone's support on the program. It's been great so far. Please subscribe to the channel if you haven't yet. The channel is The Anderson Report on YouTube. Hit the subscribe bar, hit the little bell next to it, and you'll get notifications through your favorite messaging mode on when the next broadcast is going to be. I would say right now it's probably going to be Monday at the end of the day. I won't be doing one tomorrow because I did this tonight instead. And we'll have to see if we get, any more news out of China and what breaks on this Stimulus 4.0 package. So please subscribe. It's The Anderson Report on the YouTube channel. And it's TJ Anderson 12 on Twitter, although the transmission of the video is usually better on YouTube than it is on Periscope. So it's TJ Anderson 12 on Periscope, and it's TJ Anderson 1 is my Twitter feed. Everyone have a great weekend, and we will see you next week. Thank you so much for joining.